how are consumers going to respond after coming off inflation over the past couple of years? Are they going to push back and really tighten the belts? Have they, have their excess pandemic savings been pushed through, right? And how much cost cutting then will businesses do to try to, if things are slowing, um, to offset some of that profit margins, and does that lead to more job losses? And I'll say chances are in majority of these scenarios, there's going to be a little bit of a hit to earnings. However, the bull case here we're talking about is, let's say we start to get some of those wins and we see some negotiations happen relatively soon. The markets will probably like it. We can then obviously work on China being the big one, figure out something there. See a few more companies agree to invest in our invest here in the U.S. Right? And ultimately we're kind of unwinding, and if we can get to an effective tariff rate of less than what the markets are sort of pricing in, like I said, the markets are sort of pricing in, about a 40 to 50%, recession risk at this point. Not everything's priced in; some of it is, and they're pricing in around a you know 10% effective tariff rate. I would assume. So if we get something less than that, we could easily see quickly the markets have now certainty. Businesses can kind of go back to have an idea on the game plan how they can manage this. Um, then the markets start looking past tariffs. Now that we know what it is, it's not as bad as expected, and we can focus on tax reform, deregulation. In that scenario, right, markets could rally quickly, be up 20%, in a short period of time, and and continue higher from there.